So it is Friday and the market just closed. Like always, I'm going to do my weekly market update where we take a look at what happened in the market this week. But more important, I want to take a look at what sectors I believe are a bit undervalued and could be giving us long-term investors some nice buying opportunities. So let's get started. First, let's just see what happened on the day. Dow was up about 0.4%, Nasdaq ended 0.8%, and the S&P 500 was up 0.75%. If we take a look at the overall map, we see a lot of green, especially in big tech. Big tech names are up. Microsoft, Google, Amazon all ended up over 2%. Apple was right there with 1.95. Not much red minus the banks, right? Banks right now are the ones that are on red, but everything else, especially big tech, like I mentioned, was up a nice amount. If we take a look in the past 5 days, Dow Jones did give 1.07% returns to investors, so it was a great week. If we take a look at the S&P 500, that gave investors 1.5%. Now, if we take a look at the Qs, this gave 2.1, so it's definitely a great week for big tech names for sure. I just want to take a quick look at ARK. I believe it's one of the easiest ways to just see how the overall growth market is doing. And that was pretty much flat in the past 5 days. So now let's jump into some stocks. Like always, I'm going to take a look at the ETFs, and I have a few ETFs we're going to run by real quick to see which markets and which sectors I believe are a bit undervalued. Like always, just because a market or the stock, I believe the market is a bit overextended, that doesn't mean it's a guaranteed pullback or that I'm bearish on it. It just means that I believe the risk of it seeing a pull down is a bit higher. So if we start off with the S&P 500, we can see it's definitely a bit overextended from its moving averages, but that's how it's been for most of the year. Regardless, just because there is those times where it just pulls back. It's happened here, happened here, happened here. So I do believe the risk of it happening is there, but in the long term of things, I'm still a big bull. If we take a look at the Qs on the other hand seems a little bit more overextended, a little bit more overstretched compared to the S&P 500. So I do believe the risk of a pull down, again, it's not a guaranteed, but I believe the risk is a little bit higher. If you guys are familiar with me, I am very big into the semiconductor industry. So I wanted to take a look at SMH, right? This is the semiconductor ETF. Last week when I believe it was last week when I did my previous video, I did mention how the SMH kind of broke out of their all-time highs. Right now, you can see this nice resistance level here. It's above it. Now, the real question, was this just a false breakout, or are we going to start seeing new crazy highs on our semiconductors? We've seen NVIDIA run up like crazy, but I do believe certain semi stocks are a bit overextended. Right now, I don't believe the semiconductor as a whole is undervalued. I do see a lot of companies a bit overextended. Now, if we take a look at what I believe is super extended right now, or a market, let's make it like this. A market I'm not excited to invest in right now would be the cloud computing. We can see WCLD. If we take a look at some of their top holdings, they're pretty much a software company. First, you can just see how overextended it is from its moving average. And let's take a quick look at some of its names. This is pretty similar how it was last week, right? I still believe it's the case. For example, Asana, look, this is a software stock, super overextended. Doesn't mean there is going to be a pullback. I just believe the risk of it happening is a lot higher. We have Adobe here. Oops, that's not Adobe. I'm like, the chart looks different. We have Adobe here, very similar, right? It seems very overextended from its moving averages. Box is another software company here. Again, overextended from its moving averages. So right off the bat, this upcoming Saturday, every Saturday I come up with 3-4 stocks I'm planning on buying this upcoming week. I believe I'm still going to stay away from the cloudy market. It doesn't mean I'm bearish on the cloudy market. It just means I believe there's a little bit more risk right now, and I'll rather hold on and find some other markets that might not be as overextended as this. The next market I want to take a look at, and I just closed it by accident, is Block. So this is an ETF, BLOK, an ETF that deals with transformation of data sharing. If we take a look, it's pretty much more like a blockchain style type ETF. You see a lot of big names that own either crypto or deal something with the blockchain market. So for example, MicroStrategy, right? This one is definitely that's not overextended. So I believe a good portion of the risk has been kind of let out already. Right, I'm not much into the blockchain market right now, but we can see MSTR, right? This is one that has been due to their big position in Bitcoin, I believe it has fluctuated a lot, not overextended at all. They also own Voyager. I'm not sure if you guys saw that in their Voyager Digital, which is also dealing with cryptocurrency, not overextended. Let's see what other holdings they have. PayPal and Square right now, those two, since they don't really deal too much or are affected too much with blockchain or the overall crypto news, they are a bit overextended still. Let's take a quick look at Square. Right, so Square, I want to say not too overextended. It's definitely seen quite a pullback, but it's not the same as those other. PayPal here is a bit overextended, like those other blockchain companies. Another one we have here is, let's see, Silvergate, right? Silvergate Capital is another big name for, I want to say, equity investors that want to have some gain in the overall crypto or blockchain market. So Silvergate definitely not overextended, has seen crazy pullback. So let's say I wanted to get into the blockchain or get some form of exposure into the blockchain. Now would be the time where I feel like certain companies within that market look a bit undervalued. The next market I believe is not too crazy. It's one I've been talking about lately, and it's been pretty quiet, I want to say, since the beginning of March, right? And that is the gaming market. Here we have two ETFs, Nerd and Gamer, and we're going to take a look at, let me just close some of these names so I don't get lost here. So Nerd ETF, right? Nerd ETF has companies like Huya, like Tencent. These are, again, markets, two things. They're in emerging markets, so international companies, and are also in the gaming world. So I do believe both the emerging market, like we're going to see, if we take a look at Huya, not overextended at all. If we take a look at Tencent, and I do believe Tencent might make my list for purchasing this week. Tencent, not overextended. I do believe it could be giving investors a nice buying opportunity for the long term of things. But not only in the emerging market, right? We have Corsair. Corsair has been pretty quiet, minus that random day where it really ran up. Besides that, the stock has been pretty quiet, and again, could be giving investors, we have some buying opportunities. Now that it's quiet, I feel like not many people are talking about these stocks, but why? Because they're quiet. And usually they're quiet before a nice run up. We've seen it with Nvidia. Nvidia was quiet for a nice time. AMD has been quiet for a long time. Then out of nowhere, they take off. So during this quiet time consolidation period, I believe it's a great time for, if I was looking for long-term investments, to add in. Activision, we can see not overextended, sitting next to its moving average. Same with Take-Two Interactive, and almost very similar to EA Games as well. So I am liking the gaming market right now. I believe that's probably the best market that I find the best value at the moment. Next, if we take a look, we're going to take a look at the emerging markets. I want to say this is probably the second market I believe has the best value. The only thing with emerging markets, right, you do come with that added risk of it being an international company, especially some of these in China with the overall tension that's always going on. So emerging markets, even though I do like them in form of value, I do limit my form of exposure. Here we take a look at EMQQ, and let me just close out some of these names. EMQQ, for example, we have a lot of international companies dealing with the internet and e-commerce. So you have companies like Baba, Pinduoduo, Tencent, again, JD, Mercado Libre. So a lot of these names, again, not all of them. We know C Limited right now, they have C Limited. C Limited has been very popular, a bit overextended. It is one of my top position size. But if we get closer more to China, right, we have Baba is pretty underextended, right? This looks like, in all honesty, for me, it looks like a nice buying opportunity for Baba as a long-term investor. If we take a look at JD, very similar, not overextended. If we take a look at PTT, again, very similar. So if I wanted to have time to increase my overall Chinese exposure right now, I do think it's been, again, pretty quiet and could be giving investors a nice time to just increase that exposure as time progresses. Next, we have, what else do we have? So there we have KWE. This is more of a China internet ETF. It's going to look very similar to EMQ due to the fact that Baba is probably a big position holder. JD, Tencent are big position holders. So international, definitely some there's definitely some, I want to say, undervalued or undervalued compared to the rest of the market. Now, if we take a look at popular ones like Latin America, Mercado Libre, Meli, that one seems to be a bit overextended, but not by much. Next, let's take a look at Stone, right? Stone is in Brazil. They are a fintech. Doesn't look that bad underextended. So if I wanted to kind of get exposure into the international market, into emerging market, I do believe now is a nice time to just add on. The final one I wanted to take a look at is subs. This is dealing more with the streaming world. So here we can see subs. Some companies in here, like I mentioned, some companies in here might be a bit overextended, some might not. They have, for example, Roku. I know Roku has been super excited recently, especially Roku got the button for Apple. Since that happened, the stock has kind of gone up. But look, before that, it was not overextended. It was pretty quiet. But then we have some other names like Spotify in here. Spotify, it's not overextended. I do want to say it is a bit high from its bottom, but a good volume area, a good portion of the risk has been eliminated. What else did they have here? I think they had Netflix. Netflix, a little bit overextended from moving averages. But again, look, Netflix for the past, since July of 2020, this stock has not moved. If some great news comes out for Netflix, the amount of support right now, the amount of buyers it has here, I can see this really taking off and this providing a good support level for this company. What else do we have? We have Fubo TV. I feel like a lot of investors have been talking about Fubo. Fubo not overextended at all, right? It's kind of sitting a little bit. It's pulling back a nice amount now. Not too, a good portion of the risk I do want to say has been eliminated, but it's still a bit overextended. So if we're wanting to looking into the streaming world, outside of the streaming, but still kind of in streaming, I want to say a lot of companies like Apps has pulled back down. We have Pubmatic. These I want to say, if I was looking to enter more, Trade Desk would probably be the only one that I do not like right now in form of overextension. But the other ones, Magnite, Pubmatic, and Apps, all seem to have seen a nice pull down in the ad streaming. That's another market that I feel is a bit undervalued right now compared to the rest of the market. So that's it for today's episode. Let me know what you guys are thinking of this video series where every week at the end of the market, I just take a look at some of the ETFs I find undervalued or some of the markets I find undervalued. So take care, guys. Have a good night and see you next time.